What's going on, everybody? Welcome back to the channel. If you're new to the channel, subscribe, turn on post notifications, all that good stuff. I did kind of lose my voice. I've had a ton going on recently. That's why the videos have not been coming out so consistently as we talked about in my last video. But let's go ahead and just get straight into this video. If you enjoy dividend stock investing, subscribe, all that good stuff. I did kind of lose my voice as well, but I do need to get a video out there. I feel like it's been too long. So I'm going to go ahead and talk about a dividend stock that we're going to be talking about if it's worth it to buy it on the dip. There's a number of things going on. So let's go ahead and talk about what stock I'm referring to. Now, this stock is in my portfolio. If you want to go check out M1 Finance, highly recommend you go check it out. Use the link in the description or the pinned comment. Deposit, I believe it's $100 now. Get $50 free. You can invest in the same investments as me. Remember, I'm not a financial advisor. But the stock we're going to be talking about today is going to be Home Depot. The stock is ticker HD. Now, if we go ahead and look at the stock, on Friday, it went up about 2.76%. Over the past week, it's up about 3.19%. The past month, it's down about 2.6%. In the past 3 months, the stock is down almost 20%. In the past year alone, it's down 1.35%. We had some really good uptrending all the way up to 30% returns. And then ever since 2022 hit, we've been going down pretty hard. So looking at the stock, over the past year, it's down 3%. Earnings per share really high. PE, forward PE ratio is about 19. They have a dividend yield about 2.44% and a market cap about $321.49 billion US dollars. Now, their dividend grades are really good. A low payout ratio of 44%. And a very solid dividend growth stock because that 5-year growth rate is sitting about 18.27%. They pay out their dividends on a quarterly basis, and they've been growing their dividends for 13 consecutive years. Now, looking on some key statistics and things, their target 1-year estimate is about $378, and tip ranks gives about $378, 21%, 21.5% potential upside over the next year based on Wall Street analysts. A high of 455 and a low of 314, 17 buy ratings, and 13 hold. But looking at some key statistics, they have good margins, about 11% profit margin and 15% operating margin, 20% ROA, and quarterly revenue and earnings growth are growing really, really good. Comparing these to a high competitor such as Lowe's, Home Depot does have higher profit margins and higher return on assets. Their quarterly revenue growth is growing at higher rates, but Lowe's is beating them on earnings growth by about 6%. Now, if we go ahead and look at Home Depot's financials, they're great. Year over year, we're seeing incredible growth. One thing to keep in mind is cash flow. It's really good. The numbers are not confusing me. The only thing that I'm not necessarily stoked about is the free cash flow right here, but that doesn't necessarily concern me too much, because of the amount of money that they lost in investing cash flow. So that's okay. Keep that in mind. But operating cash flow still was not as high. And this is because the pandemic did end up inflating these numbers. But let's go ahead and talk about Home Depot and some key things. So here's something about their investor proxy statement. I just want to read this. We aim to deliver shareholder value and grow our market share by providing best-in-class customer service. Kind of like, it almost reminds you like Chick-fil-A. And then we're continuously investing to improve our online and in-store experience. In addition, we ensure we're the product authority in home improvement. We strive to provide unique value and comprehensive product offerings, continued product innovation, and exceptional convenience and value. First, we intend to reinvest in our business to drive growth faster than the market, which is what you want to see in your portfolio. You want your stocks, your investments to grow faster than the average market. And second, after meeting the needs of the business, we look to return excess cash to our shareholders through dividends and share repurchases. It is our intent to increase our dividend every year as we grow earnings. So here are some key things. They increased their sales by $19 billion from 2020 to 2021, increased their profit by $4.8 billion, and their return on invested capital is about 44.7%, with about a 4% increase from 2020, which is 40.8%. Looking on to some more things, here's some key performance from fiscal 2021. About $151 billion in sales, on a $321 billion company. That's really good, providing value right now for its current share price. 11.4% comparable sales growth, 30.1% diluted earnings per share growth, and as we said, 44.7% return on invested capital. Everything, in my opinion, is looking very, very good on this company. Earnings per share estimates are looking to be very solid right now, 16.1, going all the way up to $17.31, which is really good. Expected to grow sales by about $2 billion this year. We have some higher estimates. And then the next year, about $159 billion, about $160 billion to be honest. And the growth on sales is not insane, but when you look at the industry, it's not necessarily a very growing industry in that sense. We're looking more at Home Depot taking market share and not growing like a tech stock. I still believe that there's massive growth potential, especially with the way the company can manage their sales and grow their profit margins. It's definitely very, very doable. And I do believe it'll be very profitable, as it is already very profitable, and they will continue to increase their dividend. But as we saw, price targets are giving us a lot of upside. However, Morningstar analysis says the fair value of Home Depot is about $255, which I kind of disagree with. I would say Home Depot is probably a fair value. Now, I have not done any discounted cash flow modeling or anything like that. I'd say, and I'm just saying this for now, I don't plan once it hits this price I'm selling, but I think it's a good opportunity to buy anywhere until the stock is about $340, $350, and I think that's where it's fairly valued, and as it grows, it'll grow more and more and more. And if the industry, if we see a recession come back, where people end up having to stay at home and work from home, we see that continuing to trend up. Home Depot has massive potential to continue to do this. It's in my portfolio for a reason. I do believe in the company, in the stock. If we go ahead and see, institutions are buying a lot more. $22.08 billion in inflow compared to $17.64 billion in outflow. We're seeing a lot of different things happening for this company right now, but I do believe the upside is 1,000% there. So I myself am buying this stock. Remember, I'm not a financial advisor, but that's all we gotta know for this video. So if you enjoyed it, make sure to subscribe to the channel, turn on post notifications to miss out on any future videos. Thank you for making it to the end of this one. Check out M1 Finance if you have not already. They have some huge promotions going on. They're handing out free money. As long as you put some money in, you can go use my portfolio. Go check it out. You can use other people's portfolio. M1 has been really, really helpful to me. Thank you again. Leave a comment below what you think about Home Depot HD stock. I always love to hear you guys' input and opinion. Thank you again, and I will see you at the next video.